Bitcoin is still needs to rally 10 times just to get to gold's market cap. And that's just Bitcoin and that's just gold. I was a very early investor in Ethereum at around $18. Second venture piece that we launched, Polkadot, was actually one of the projects that was in there pre-ICO.
Yeah. Do you recall the first time you lost a load of money on crypto?
Second half of 2018 was basically ICO Mania.
Do you think maybe this time is different?
Those 4 words are some of the most dangerous words to ever have in finance.
You are a total space monkey. You're a pioneer in this space.
The launch team wishes you good luck and Godspeed.
Space Monkeys, blasting off with John Vincent. He's the founder and CEO of Wakem Capital Management. We're very lucky to have him with us here in New York City. John, welcome to the show.
Thank you. Appreciate it, Jay.
Wakem Capital Management, this is a project you started in what year?
Really 2017.
Okay.
I had been working in traditional global macro for managing money for almost 25 years.
Yeah.
And the truth was in sort of late 2016, 70% of the world's central banks had negative rates. Almost every single fiscal policy across the globe was really in deficit.
Yeah.
And, I was looking around volatility, and I'm primarily a derivatives trader or a portfolio manager of derivative products. They were all at all-time lows. And so I'm looking at how do I generate positive alpha? So I looked at those things, and the truth is, from a fiscal, from an economic perspective, they're untenable. And so what I was trying to figure out, or what I was really concerned is if we were to have some event similar to what we saw in 1929, and then the following 1930s, in the world we live in today, which is basically global. So in the US in the 1930s, what you saw is that people hoarded gold. It's so much so that the government actually outlawed the sort of private ownership of gold.
Yeah.
And really what started my journey was this idea of like, what if we were to have some sort of fiscal global accident?
Yeah.
What would be that asset that people would look to hoard today?
Okay.
One of my college close friends is a guy named Joe Lubin, who was one of the founders of Ethereum.
Oh, yes.
And so I called Joe up. Joe had an office out in Bushwick in Brooklyn. And I was like, really, what I said was, I want to understand Bitcoin.
Yeah.
Or I want to understand, in my view, crypto, or at the time, I still really just thought of Bitcoin. Bitcoin is digital gold. I want to understand what digital gold would look like. So I went down to their office. It's Consensus is the name of his firm in Bushwick. And, he was like, look, love what you said. I'm going to have you sit down with these 6 people. And it was one of these things where, you hear in your head like the glass breaking. And it was like, well, here, yes, digital store of value is one utility, but there's also, we've got 1 billion people in the world that are unbanked, that have literally no access to the global GDP at all. We're going to find a way to sort of bring them in. Like we're going to take information and we're going to decentralize it. We're going to remove friction. And I was like, whoa, I felt like, wow, I like this, something that was incredibly unique.
Wow.
I went back, I was working at a 6-vol hedge fund up in Connecticut. So what I mean by that is very buttoned down, very conservative. And I'm like, I've seen the future. And they were like,
no.
So I went back up there. Princeton, where I'd studied economics as an undergrad, a guy named Ed Felton, who's in our space, was teaching a blockchain technologies course.
Okay.
I was able to take that remotely.
Yeah.
And came out of that and realized that where I was, crypto was never going to become a part of a 6-vol strategy. At the time, vol was probably about 145% annualized. What was interesting is another close friend of mine was setting up a family office. He had sort of fallen down the rabbit hole as well. And he's like, look, come on in. I'm trying to get together a bunch of really smart people, and we're going to figure out how to make this work. And so I left the hedge fund up in Connecticut and started coming in right here to 107 grand. What was really interesting is at the time it was super early days. Ethereum had pretty much just launched. We were sort of figuring it out as we go. The idea of custody, part of what was interesting about why I went in to sort of form a fund on my own is that as I got into the space, the thing that I noticed most of all is there were some of the smartest people I've ever come across.
Yeah.
But most of them were either sort of technologically off the charts, or or coding in terms of their background. Whereas my background was building risk management structures, building institutional rails.
Sure.
And so what I basically, sort of had this idea of like, look, I'm going to take my risk management and middle and back office and infrastructure piece and build that into this space. Not even so much that I thought, wow, at the moment, no one was really asking for that.
Yeah.
But down the road, like that, people were going to be like, wait, okay, what I need is I need to understand, how you're handling custody, insurance. How are we reporting? How are we, managing, hard wallets? Everything across the board.
Right.
And so that was sort of what led me to launch our flagship fund in 2018.
Total pioneers. And that origin story as well. You're looking around the global financial markets and you see the cracks, basically.
So I was all in, and I literally met with a number of people who I've known in this space for 25 years. And I'm like, look, this is what I'm looking to do. I'm looking for support. I'm looking to raise a little bit of capital. And, the crazy part is they were like, what you're talking about, it's crazy talk. Like, look, if you want to set up a global macro strategy there, no problem. I can fund you on a global macro side.
Okay.
And that's one of the biggest things about where we are now versus where we were then.
Yeah.
At that point in time, you would lose your job for basically saying, I want to be involved in the digital asset space.
Yeah.
And I think we finally turned a corner where now the institutions may not have fully come in yet, but they're on an educational and on a learning curve.
Understood,
so it's now you're at risk of by basically ignoring it. And so you went from a point where you couldn't invest in it and sort of keep your job to now you won't keep your job if you don't at least understand the ecosystem.
So where did those first funds come from? Those early ones?
Well, so I'm still the largest investor in all of our strategies.
Okay.
My friend who I came down and was using the office space for, his family office funded us as well. So, and still honestly, primarily right now, most of what we're looking at, or most of our investor base, family offices, high net worth individuals, and we're just starting to bring in some of the institutional counterparties right now. And that sort of idea that I sort of came up with early on, which is building, sort of taking this TradFi approach to risk management and sort of institutional rails. Suddenly now that is something that is really resonating with people on the institutional side. And so I was probably 4 years too early. But I knew I was going to be early, and part of what I wanted to be able to do is like, if you build it, they will come. That was sort of, I'm a big believer in sort of the Wayne Gretzky's sort of hockey analogy, which is you skate to where the puck is going to be, not where the puck is. And so I just didn't realize the puck was quite as far in front of me as it was.
I feel like a lot of us have experienced that. Absolutely.
Yes.
But no, you are a total space monkey. You're a pioneer in this space.
Well, yes. I mean, most of my sort of old cohorts, and as they say, I had been a discretionary global macro manager for 25 years.
Yeah.
Most of them thought I was crazy because at the time, global macro was a place where people were allocating a lot of capital.
Sure.
No one really wanted to allocate capital to the crypto side from the traditional world.
Yeah.
And yet, boy, I was absolutely convinced that what we were seeing was the future. It was transformational. And what I would tell you is I believe that more today than I did then.
Do you recall the first time you lost a load of money on crypto, on a trade?
So really sort of second half of 2018 was basically ICO Mania.
Yeah.
Look, while looking at it and sort of recognizing that it was crazy, it also seemed that if it really almost didn't matter. So I think what happened in the second half of 2018 is I looked at a number of projects that didn't meet, what I would call my investment criteria, but as a trade. In other words, the point was trying to assess on the ICO basis, if you write a check now, how long till the coins will basically be unlocked? How long will your lockup be? And then you can get out of them. And sort of, it was a mania. And I think what ends up happening, and it was probably a really, really good lesson, is that I veered a little bit away from my process into the idea that, look, first thing when I'm looking at, let's say something, not in the liquid side, but let's say more at the time, like, what do I think of the management team? What is their business plan like? What is their run rate like? And are they solving a problem that sort of needs to be solved? And I think that during this latter portions of that period, I was able to sort of offset a few of those by saying, do I think that I'll be able to access or get an exit or liquidity but before that is we're going to run out? So I made a couple of investments in 2018 that didn't meet my criteria, but there was an iced tea company in Long Island that changed their name from Long Island Iced Tea to Long Island Bitcoin, and their stock like quadrupled. Like so, it was a great lesson for me in terms of sort of sticking to your knitting, like knowing what your process is, and like, look, I have a specific way that I generate alpha over time. I think part of 2018, or really sort of latter part of 2017, you veered away from that a little bit because it seemed like it was so easy.
Yeah, I hear that. What were some of the big successes from that time?
I was a very early investor in Ethereum. I think I started buying it around $18.
Nice.
And then, we launched our strategy, which was a full, as I say, it was built on an institutional platform. So risk management, middle and back office, liquidity, etc. I was sitting in an office that not only I was sort of looking at an ecosystem that was exploding, but also there was my friend's family office who had a lot of people coming in every day. So I was looking at multiple projects every single week. And sort of one of the deals I had made with my investors is, look, this is a fully liquid strategy. Every product that'll be in there will be liquid. But I do occasionally see, whether it's an application or a layer one, or it could be a DeFi project that is really interesting but is not liquid. I'm willing to show it to the investors. And it was one of the big things, I sort of stopped in the middle of the story. One of the big problems early on in, let's say, 2017, 2018 vintage, was that there was a mismatch between investment liquidity and investor liquidity. And so people would invest in a fund thinking they had quarterly access or monthly access to their funds. And then the fund would turn around and they'd buy Bitcoin, they'd buy Ethereum, but then they'd also invest in a bunch of ICOs or projects or venture type projects. And it works as long as everything is going up. But what happened was in 2018, we had our first pretty big correction into the latter part of 2018. And so when people tried to redeem from that, so it was basically one bucket. And in that one bucket was venture deals, coins, it's stuff that was locked up. And so when they went to redeem, they were getting back, here's 60 cents on your dollar, and these 6 projects that you now have to try to manage on your own. And so one of the things that I took away is that there needs to be a huge reinstituting of making sure that investment and investor liquidity are matched.
Understood,
and so that was the idea. And so what I had come up with our investors is look, I come across projects, some of them I really love. I will show them to you. If you like them, I'm willing to spin up an SPV. You can invest, you can not invest, you can invest whatever amount you want, but it's liquidity by appointment because we don't know when it's going to have, a TGE or not.
Yeah, that's something I've learned in the past few years. I've done some early investments. I'm still waiting for TGE. It's crazy, right? They're like 4 months. And it's 2 years and 4 months, We're still waiting.
Exactly.
It's
so that
wild,
was, and I think that was a direct result, or it was, I think I learned that or relearned it, that making sure that you're matching those two pieces is really important.
Okay, gotcha.
Yeah.
So I was wondering if there's any specific projects that you wanted to call out, though, that were big successes.
So the second venture piece that we launched, Polkadot, was actually one of the projects that was in there.
You were in Polkadot pre-ICO.
Yes, pre-ICO.
Yeah.
So Polkadot was one of them. Solana was one of them.
Nice.
Avalanche. So, you asked before about ones that didn't work out. EOS was also an alternative layer one.
Of course, I
was an investor in EOS.
Nice.
And that did not work out particularly well for me. And that goes back to the idea of the team is critically important. Like I'm
Okay.
not casting any aspersions anywhere, but it was a reminder how important the teams are in terms of when you make investments.
Okay. Yeah.
And so in that that window, what I was really looking at is that we needed to see scaling in terms of decentralization, transaction. In other words, to make it functionally useful.
Yeah.
Because even back then, I think Bitcoin was digital gold, store of value,
Easy.
in the box, really easy.
Yeah.
But where I think we're going to be, let's say over time, when we're going to be using it to take an Uber or get a yellow cab or buy a Starbucks.
Yeah. Yeah.
That didn't really exist. Honestly, to some degree, I would say it still doesn't exist right now. But we now have multiple projects that are decentralized enough and have the speed and certainty that we're starting to see that really come into play right now.
Yeah. All right. So Avalanche, Solana, very nice bets.
Yep, absolutely.
Our audience is pretty heavy Polkadot.
Yep.
Do you remember or could you dig in a little bit more to the initial thesis with Polkadot? What did you really like about it?
Well, Gavin Wood.
We love Gavin Wood, yeah.
I'm a huge, as they say, Joe Lubin was, a super close friend. Visionaries, people who are looking at the future and aren't just driven by the financial. In other words, that I think honestly that in my opinion that was one of my mistakes, is that Gavin had a vision of the world, decentralized, multi-chain world, and I really thought that as we move towards let's call it, as it becomes ubiquitous in our society, that's what we were going to see.
Yeah.
And so that story really resonated with me.
Me too.
And so it's both, what I would say is both the story and the person. Like I thought that, Gavin was part of the early days of Ethereum as well.
Of course, yeah.
One of the things I really liked is there seemed to be an ability or understanding you can do good, you can do well while doing good. Maybe that's the right way to say it.
Yeah, totally.
And so the fact that this ecosystem could have a profound and positive impact on our society, on the globe, that was really what I thought was incredibly unique about a number of the alternative layer ones that I was looking at
no
that
doubt.
time.
Yeah. But you're not really dealing with Polkadot anymore, the DOT token anymore?
I was involved for a while. The truth is, I think I became a little frustrated. Sort of the movement to the functionality or functional utility I felt has been fairly slow.
Yeah.
Crypto is thematic. It's very much a story.
Yeah.
Polkadot had a incredible, at one point in time, Gavin told that story and I was hooked, very compelled.
Huge. Yeah, right up to the parachain launch. You remember that? And
exactly. But then the parachain, the launch, but then we didn't see it being used, or at least I didn't find it being used all that well.
Yeah.
And it felt like it became a little bit rudderless. I mentioned
it did indeed. Well, remember Gavin Wood actually stepped down from the Parity, the main technical group there for a while, and there was this other issue where they created all this block space, all this capacity, but to your point, it wasn't really being utilized.
Yes.
It was kind of like a big empty stadium.
Yeah, so
right?
it was a little bit like I couldn't find the functional utility to go along with I love the idea of it. And then it's taking that idea and putting it into practice. And what happens is, at the time, then you had Tolly come out with Solana, who had in other words, but he was there all the time.
No, exactly. Founder-led in a huge way. Yeah.
And I feel like, so if you look at Solana, and what I truly believe is what happened with SBF, if he didn't have so many devoted, their army was so devoted, that ecosystem would be gone. But they were committed, and I guess for me, I had trouble finding the same level of community or like the XRP army. I don't understand them, but I truly know that they're
Cardano.
Exactly. It makes no sense to me because I can't find any upside in terms of that's a terrible thing.
That's okay. You're being honest.
What I would say is it's hard for me to understand where Cardano is going. But there are people who are diehard believers.
Totally.
Yes.
Yeah.
And so what I felt like with the DOT community is I didn't see much being built there. Most of the sort of developers were working on Ethereum. Some of them were starting to come over to Solana. Actually, a bunch went to EOS and then sort of left the EOS because they were sort of orphaned. But what I found is it was a really great concept that I didn't find made that next step at the time.
So I think you've kind of touched on it here, but maybe just to hammer in on it, is there anything that you'd like to see from Polkadot that would change your opinion on dealing with the DOT token again? Or do you think that's kind of like, it's done its maturity curve? And
it's not that I think it's necessarily done its maturity. The truth is I don't know.
Yeah.
But I would like to see, what I want to see is builders building applications on it that are useful.
Yeah.
Look, you see Tom Lee on between CNBC, Bloomberg, or whatever, so I'm not advocating for a DOT a digital asset treasury for DOT. Although what I do think is as they say, crypto right now, you're thematically telling a story.
Yeah.
Like you can't ignore where you've been, but where we're going in the future, I think would be interesting. You take a fresh look, but it's hard when people sort of move on, and then you've got to sort of reintroduce
hey,
things.
Look what's going on. Yeah.
Look, we had this great functionality. You had it, but it didn't necessarily immediately turn into applications that were being used.
Yeah.
And so now it's a question of how do you regain sort of the juice?
Yeah, and that mind share too, right?
Yes, they're sort of interconnected.
That's
really.
right, yeah. I mean, the truth is that what's happening on Polkadot today is really astounding, but it's all kind of happened very quietly.
Yeah.
When people hear about it, it's going to be quite exciting, but they need to hear about it. You need to hear about it.
I mean, I'm in the space. I'm under the hood every day, and I haven't heard about it.
Yeah.
Here's what I would say. What I can definitely tell is there has been recently a real movement made to try to sort of take it back up and sort of reintroduce.
Yeah.
Let's call the ecosystem to people.
Yeah. Gavin's back.
Yep.
Did you know we cap supply?
I did not know that.
Yeah, so it's not official yet, but we just voted to cap supply at 2.1 billion. We're at 1.6.
And that is those are the type of things that but they need to be
nobody knows yet. Yeah.
Yeah, I did not know that. So looking at inflation, inflation curves, those are things that are really important.
Totally, I know. Yeah.
There needs to be a voice out there sort of letting people know what's going on.
Yeah, no doubt. Well, I think that's some of the work that our mutual friend Karen from Polkadot Capital Group
exactly. And I wasn't sure about saying names or not, but I mean, Karen is number one, she has tons of credibility in the space.
Yeah, she does.
And so those are the type of people, when you're hiring really smart, really credible people back to be sort of the leaders in your ecosystem, those are the type of things that cause people to take a fresh look.
Yeah, it's so exciting.
Yeah.
Well, thanks for your honesty. I really appreciate it.
I don't want to offend anyone. I just try to tell it.
We talk about the issues of Polkadot a lot on this show, and the viewers are very keen to hear other opinions. So yeah, we very much appreciate it.
Good.
But we have a lot in the barrel and ready to go forward. The question is, where are we going? We're here at the last quarter of this, 4-year cycle, allegedly. The reins have come off finally. After, I think we were talking before, years of what's the word you use, persecution almost.
Well, I mean,
right?
Gary Gensler pretty much doing everything he could to stifle innovation, to stifle the effects of decentralized technology, blockchains.
And why? Why? Remember when he came in, there was all these videos of him teaching.
He was a professor.
Yeah, he was like
taught
so
a
in
blockchain
favor
technology
of it.
course.
Yeah, what the hell happened there?
Clearly there was a broader agenda.
Yes.
Look, there's been massive innovation across most of, I would say, the various landscapes that exist for humans. The financial landscape really hasn't changed much.
Yeah.
Let's say in the last 30 or 40 years.
Right.
Just blockchain is completely transformational. What we're seeing in terms of assets moving on to blockchains, the price discovery, lack of friction, decentralization, these are all critical things that all they are they're good for the individual consumer, individual investor.
Yeah.
Honestly, across the board, these are all things that benefit the masses as opposed to the few. And when I say few, whether it's regulatory or the banking, community, et cetera. When I first started in the space, B2B, like B2B, whether it's lending, like B2C, B2B, like all of these things are very recent. And what they do is they increase efficiency, they add to decentralization and more empowerment of individuals. It's taking what I would say is people's well-being, their future, and putting it on a more upward trajectory across the board.
Yeah.
I mentioned before, like there's still over 1 billion people who don't have either a bank account, or any form of identification.
Yeah, wild.
But they can have a cell phone. On that cell phone, they can have a wallet.
Yeah.
Immediately, that takes them to be able to either borrow, lend, stake, and it takes them out of, like, right now their contribution to global GDP is 0. Like, suddenly they become productive members of the global the global GDP, and that's a really critical thing.
So you think this? You scoffed a little bit at the 4-year cycle, or you said allegedly. Yeah, you think maybe this time is different?
Those 4 words are some of the most dangerous words to ever have in finance.
Yeah. But you are contrarian, right? You have bet on.
I would like to say that I see around corners as this. Like, I don't consider myself to be naturally contrarian. I think that discretionary global macro, the reason why there's so many people who came from there to crypto, is the world changes at the margin. So it's in other words, it's not being contrarian. It's looking at the future and figuring out, all right, are there ways we can approach this that are better, different, unique? Most guys who are looking at the world from a macro perspective. So I'm not looking at just an equity. I'm not a P/E ratio. You're looking at fiscal policy, monetary policy, capital flows, trade pictures. Like, you have all of these elements that you're sort of judging, and it's these tectonic shifts that occur in small movements, and then suddenly the world looks very different. That is occurring now, but the speed at which the innovation of blockchain technology and digital assets, there is no putting the genie back in the bottle. I would really say we have crossed a Rubicon now. I mean, to me, the day that Larry Fink came out and basically got behind the idea of what Bitcoin and blockchain were, that was the day the entire world changed. And one of the things I've said is, like, look, there were 2 ways for the largest heads in finance to approach this. You had one who was the head of the largest U.S. commercial bank, was sort of fighting it every step of the way. You had the largest asset manager in the world who did some due diligence and was like, wait a second, there's actually something here that is pretty unique, and sort of ran towards it as opposed to running away. And I think that changed people's minds. So we went from being like, we're this upstart little ecosystem that conceivably could be gone in X number of years, to now we could look out in 10 years and all assets are going to be tokenized and on a blockchain somewhere. And so you have all of this, you have all these assets that have no price discovery. So commercial real estate, etc. Suddenly we're going to have a marketplace for them because there is a price discovery mechanism that unlocks wealth, innovation. The thing I've always been saying about what's going on is we're building the road that we're driving on as we're driving on it. And so, like,
that's right.
I can't even really fully know what it's going to look like, but we're doing it at it's such a unique and incredible pace. That I think we're waiting for that one, let's call it consumer application. That and I don't know what it's going to be. The truth is, I don't think anyone will know what it'll be until it'll suddenly happen. And once that happens, people will be like, "Oh my God, how did I ever live without this?" And it's this big change. So I understand that a lot of people love looking at 4-year cycles. I don't think it's quite as simple as that right now. You have the theoretical cycles, presidential cycles, etc. But you also have, for the first time, we're seeing institutions coming in, and there is this massive wall, so our marketplace, is here. Bitcoin is still needs to rally, 10 times just to get to gold's market cap. And that's just Bitcoin, and that's just gold. In theory, the entire capital market structure could be moving on to the blockchain. And the things that's going to unlock, it's just really hard to say. And so maybe the short-term, secular cycles that people are looking at, but the broader cyclical nature of things, I think we're still very, very early.
Yeah. Well, John, thank you so much for being a pioneer in this space. You're taking this little niche technology, putting it on institutional rails before anybody else is thinking about it, or many of the people around you. And now everybody's playing catch up. They want a piece of the action, and you're already here.
And what I tell you is it's super early days. I mean, you know, and that's like, so one of the things that we've just, I know we got to go.
No, you're
so
cool.
what we've been building is basically a platform in the same way you would look at traditional assets. And so we have our liquid strategy, which is using derivatives to basically get directional exposure. We have the venture pieces that I talked about that have a very different, you know, sort of liquidity profile. We have a quantitative strategy that looks at basically it's a volatility adjusted pattern recognition system, but it's fully quantitative. So in other words, there's no discretion to it at all. And the way we built that is after FTX, we were like, all right, so you need to remove exchange risk, you need to remove custody risk, you need to remove settlement risk. And so we basically built something that is in cash at the end of every day. And then we're sort of, now you're looking at what's going on with yield. And one of the biggest, you know, if you say, okay, what am I looking at going forward? I think DeFi is going to have exponential growth over the coming 3 years, 3 to 5 years. And part of that is because it's done exactly what it's supposed to have done. I think the yield is also going to be something that people are going to be looking at a lot more closely.
Didn't we just get a green light like this morning or yesterday about equities on chain?
That's right.
Yeah, that's wild. What is that going to do?
So, like these are huge changes that take a little while for people to get their head around.
Yeah.
But like they're transformational in terms of what they need going forward.
Absolutely. And then when they're there on the monitor, you know, where everything else traditionally is, what's the difference? Once you know the risk profile and all this, then you're just off to the races, right?
Absolutely.
Yeah.
Yeah.
Thank you so much for this important work, and thanks for coming on the show and sharing it with us today.
Very nice to come on board. Thank you very much for having me.